All right, so we had a pretty crazy week in the markets. Things were down a lot on Thursday. They did come back a little bit on Friday. We had 4 of the Mag 7 stocks release earnings, which I want to get into. First things first, if you get value out of this video, please like and subscribe, comment. I really appreciate that. First thing I wanted to talk about here briefly, Jim Bianco points out the MOVE index measures the implied volatility on the 30-day bond versus options on the 2-year to 30-year. It's the VIX of the bond market. Today it closed at a 1-year high, suggesting the bond market is pricing in upcoming volatility. So this is something to look out for because I've been saying for a long time that we are overdue for a correction. Now, what I've also been saying for a long time is that nobody knows when it's going to happen. If it's going to happen, doesn't necessarily have to happen. It's just likely that it's going to happen at some point. And the question is when, and the question also is when it happens, how deep will it be? I think that the reason that there's this volatility is we have the inflation data, we have the election, I think is the big one. And then, I mean, there's lots of other stuff as well. And not to mention, too, I think that the stock market's a little overvalued. So this is not completely surprising here. So keep an eye out for this. This is clearly implying that we're going to see some volatility, at least overwhelmingly likely we're going to see some volatility in the near future here. So keep an eye out for that. The inflation actually came down. I mean, they're at 2.5%, which means they're up, but they're down from 2.9% in July, so they're technically down there. So inflation clearly has cooled. Is it going to stay that way? I think that's a good question. I think that it probably does. We could see a little bit of a spike, but I don't think we see a crazy spike. The fact that inflation hasn't came down below 2%, I think, is also part of the reason why the bond market's kind of freaking out. Because, I mean, if you look in like Canada, for example, our latest inflation print was well below 2. So, you know, our bond market hasn't freaked out, but the States has. So keep an eye out for that. And I think it's also partially because of the election. Also from Jim Bianco here, a good way to measure the perceived health of the U.S. economy is to measure the public's ability to spend on things they want to but don't necessarily need to, otherwise known as discretionary spending. So a survey of 3,000 households asking whether they're planning a foreign vacation, 22%, which is literally an all-time high. You also have to keep in mind that the jobs report that came out on Friday was really bad. So something that I pointed out here in this market is there's a lot of conflicting data. There is literally data that shows this only happens when we're in a recession or about to go in a recession. And there's also data that only happens when we're not in a recession and we're not going into a recession. So this market is very hard to predict. My go-to prediction has always been follow the recent trend. And the recent trend is still up. Could we see some short-term volatility? Yes. But in the very near future, I still don't see a recession. In a year or so, yeah, that's possible. But over the next 6 months, probably not. And then the last thing I wanted to bring up here before I get into earnings, Bitcoin hit a new all-time high, at least in most currencies this past week. It is down a little bit since then. But this is kind of an interesting post here from Finance Guy on Twitter, who's fairly popular. Bitcoin is up almost $20,000 a coin since Finance Guy smugly tweeted this one-day chart. And this was literally the bottom for Bitcoin. Like, it was 53,000 something, at least based on US dollars. Like, literally the bottom. And this would have been on, looks like, was that June 6th. So, nobody knows what's going to happen with Bitcoin. I think the big thing in the short term is the election, because Trump is clearly more pro-crypto than Kamala. However, I think, as much as I think that the Democrats and even some Republicans don't like crypto, I mean, there's some Democrats that like it, to be fair, but it's them that clearly dislike it more. I don't think any candidate or party can afford to be overtly anti-crypto, simply because too many young people own it, and the young people are the biggest swing vote, at least of the current generations. I mean, the older generations are pretty set in stone and set in their way. The younger generation, at least based on the data I'm seeing, are the ones that can be won over. And a lot of them, whether they're right or left leaning, they really like their crypto. And there is quite a few people, like I wouldn't vote for someone who isn't either doesn't talk about it or is pro crypto or Bitcoin preferably, but typically they'll talk about crypto. Like that's a complete non-starter for me, like a complete non-starter. And I know there is quite a few people like that. And the fact that someone like Trump has adopted this pro crypto stance over the last 4 years, clearly he's getting data from his advisors saying, hey, there's a lot of people out there that really like this stuff. You're probably going to want to be for it. I think that's rather obvious. So keep an eye on that. I think that it's only a matter of time until we see a massive run-up in Bitcoin. I think it's going to happen over the next 6 months to a year. I've been saying that for a few months now, and I think that it's very overdue. It's very overdue. And I think the big question is, how low do we go after the recent? It's a very small pullback, but how low do we go? I think we're kind of waiting on the election. If Trump wins, we could see like a $10,000 or a $20,000 weekly candle. Like that's legitimate. So if you're planning on buying some, I probably would buy before the election, because even if Kamala wins, I don't think it's necessarily bearish. I just think it's not as bullish. Just my opinion, obviously. Let's get into earnings here. There's a ton of companies I wanted to get into. Meta released earnings this week. They did beat earnings. They missed revenue. They were down on the week about 1.5%, or maybe 1.5%. As far as the markets go, I didn't bring up the markets. The growth side of the market got killed pretty hard this week. The S&P was down 1.5%. The Nasdaq was down 1.5%. The Meg 7 was down 2%. The equal weight index was down, I think, just under 1%. Small caps were down just a little bit, and I think, small caps were basically flat, and mid caps were down just a little bit. So the small caps outperformed the most, followed by the mid caps, followed by the equal weight. So the value side of the market, the smaller companies clearly outperformed this week. I think that's probably, like, when things are down, that's what's going to happen. When you see a down market, it's going to be the growth side of the market that's going to get killed the most. So keep an eye out for that. Meta, probably mediocre earnings, I would say, at least based on what I interpreted, and that I think the market kind of agreed with that. They were down on the week. The next one was Microsoft, which released actually pretty good earnings. The one problem that they ran into was they lowered guidance, and that's caused their stock to be down quite a bit this week as well. So Microsoft, still way too expensive. Let's check and see on their valuation, just out of curiosity. Yeah, they're only a little bit above their historical PE, but a 32 PE is still way too high. This is a company that I would pay low 20s, like maybe between 20, maybe 21, 22 at the most. So it's still going to have to come down probably 20% before I'd be interested in it. The next one here is Amazon. Amazon actually released pretty decent earnings. They were up on the week. Amazon, of the Meg 7, I think if I were to buy one right now, it definitely would be Amazon. Not necessarily because I think it's the best company out of all of them. I think it is pretty good. I just think it's the best valuation where it's at right now. And I mean, earnings is kind of hard to value Amazon. It is very hard to value Amazon because the way they depreciate and stuff, it's very hard. Their valuations aren't really accurate. And I'm not an accounting expert, so I don't really know how to explain it perfectly. But from what I've read and from what I've seen, just the way they depreciate and the way they book their earnings, it just doesn't look accurate. Because obviously a PE of 39 and a price of free cash flow of 45 is really expensive, but that's considerably below their historical average. So Amazon, of all of them, I think is the best right now. That doesn't necessarily mean I think it's a screaming buy, but I think it's the best, at least out of the Meg 7 right now. Apple released mediocre earnings. They were down kind of quite a bit on the week. They're definitely overvalued where they're at right now. If we look at their historical valuations, I mean, they're 20% above their PE, 28% above their free cash flow. So definitely quite a bit overvalued here too. Definitely one you'd want to stay away from. I remember seeing it in like the 170s and thinking, okay, it's probably a buy where it's in there, but at 222, it's still way too expensive. So let's get into some other companies here. TT, Train Technologies. This is one I have on a watch list. I do like it. I would buy it if the price was right. They did beat earnings and revenue. CF Industries, this is one of the better chemical companies. I do have a very small position here. They beat earnings and revenue. They were up on the week. EQIX, this is one I also have a small position in, maybe 1-2%. I really do like this company. However, I think it's too expensive where it's at right now. I definitely would buy more if it got cheap enough, but until then, it's just kind of a watch right now. KLAC is a company that I've had on a watch list for probably 2 years. I've never bought it because I've always thought it's too expensive, but I mean, if we go back let's go back like 3 years here, just out of curiosity. It's up quite a bit over that period of time. Now 67%. That's not crazy, but that's still over 20% a year. So this is one I definitely would buy if it was the right price. It's just too expensive where it's at right now. However, MicroStrategy, obviously up a lot on the year, given Bitcoin's run up. This one's kind of interesting. MicroStrategy it's incredibly risky, but if you want to play the Bitcoin play through the stock market, MicroStrategy is probably the best name to do that with. However, like I mentioned, you have to be very careful because honestly, they probably will be more volatile than Bitcoin. So you want to be very careful. But MicroStrategy probably is the way to play Bitcoin if you're going to play Bitcoin. MPWR, another one I have on a watch list that I definitely would buy if the price was right. They missed earnings, beat revenue. Paycom Software, another one I have on a watch list. I would buy if it was the right price. They beat earnings and revenue. They were up a lot recently. I mean, I remember they were like in the mid 150s, even in the 140s at one point, and they were up. I mean, just in the last month or so, they're up about 28%. So, congratulations if you bought Paycom back there because you definitely did extremely well. Starbucks, another one that has been in the news a lot lately with the new CEO and all that stuff going on there. Missed earnings and revenue. They were actually, what did they do on the week? They're basically flat on the week, although it looks like they're actually up a little bit after earnings, but they did come down a little bit. The next one is Teladoc. This is one I have on a watch list. I might possibly buy if it got cheap enough. It did actually release solid earnings. It was up a little bit on the news, but they're still losing money, so that's why I don't think I ever would buy a company that loses money, so that's something to keep an eye out for. Universal Display is one of the largest companies in my personal portfolio. They beat earnings and revenue. They issued kind of somewhat shaky guidance. They were down a lot on the week. They were down like 10%. So I'm still up a lot on the position, but I mean they were up over 214 at one point this week, and they're down to 180. So that's probably even 15%. So very good company in my opinion, although it's still too expensive if you want to take a position where it's at right now. Another one I really like, I have a small position in, Watts Water Technologies. They beat earnings and revenue. Very good company in my opinion. I still think they're a tad bit expensive. I think probably below like 180 probably would be where I would pick up more. CNQ, this is one of the best oil and gas companies in my opinion, probably top 3, maybe even top 1 or 2, but I really like them. I do have a good sized position in them. Earnings right on. They missed revenue. That would be, with lower oil and gas prices, that's not completely unexpected. ConocoPhillips, another one of my favorites, probably not in the top 3, but I do like them. Beat earnings, missed revenue, same story there. FSS, this is another one that I have on a watch list. I probably would buy if the price was right. This is Federal Signal. So Federal Signal, they beat earnings, they missed revenue. Solid company in my opinion. Too expensive where they're at right now. However, though, GWW, another one I have on a watch list. I do like this company. Missed earnings and revenue. They were actually up slightly on the week. And I've been watching this one ever since it was in like the mid 800s. It's over $1,100 right now, so it's definitely gonna have to come down quite a while before it gets cheap enough here. LECO, this is one I made a video on recently. I am buying this company right now. Beat earnings and revenue. MasterCard. I really like MasterCard and Visa. I'll get into Visa in a little bit here. Very good earnings from MasterCard, and as usual, these companies tend to report very good earnings. It looks like they're actually down slightly on the week, although that's more than likely due to the larger cap, growthier side of the market just being down. The next one here is Onto Innovation. This is one I do have on a watch list as well. I do like them. They're just too expensive where they're at right now. Beat earnings and revenue, while they were down on the week. And the next one here is Trex. Beat earnings and revenue. They were actually up quite a bit on the week. The next one here is UFPI. This is one I have on a watch list. I might possibly buy it, depending. Missed earnings and revenue. They were down quite a bit on the week on that news. Waste Management. This is one I really do like. I've talked about it quite a bit before. They did release good earnings, although they trended down after that. Very good company. This is one that I think is a must-own if you can get it for the right price. It's just too expensive where it's at right now. American Tower. This is one of the biggest REITs on the market. I think it's like the second or third biggest. They did miss earnings. They were down quite a bit on the week. The next one is EPD. This is another one of the better oil and gas companies, in my opinion here. Earnings and revenue were both in line. They were down a little bit on the week. ITT, this is one I'm buying right now. I do really like this company. They did beat earnings and revenue. Another very good company, in my opinion. They were down on the week. Masco, this is one I have a very small position in. I would buy more if it came down, probably to the low to mid 70s. Revenue was in line. They did miss earnings. McDonald's beat earnings and revenue. McDonald's, I don't think I ever would buy just because it's too kind of boring and big and boring. I don't think it'll grow well enough, but still a good one to watch. PayPal beat earnings, missed revenue. I don't think I ever would buy them, but I mean they're a half decent company, but just not my cup of tea. MSCI is one that I was buying a little while ago. I wish I could have got more of it. Beat earnings and revenue. They were down a little bit on the week. This is another very solid company. I would buy more if it was the right price. It's just a little too expensive where it's at right now. Pfizer, this is an example of a company that I probably almost certainly never would buy. I just watch it because a lot of other people watch it. Beat earnings and revenue. They were actually down on the week. The next one, AMD. They did beat earnings and revenue were both in line, although they lowered guidance. That caused them to be down on the week. ALSN, this is one I am buying right now. They beat earnings and revenue. They were up quite a bit on the week. This one's probably starting to get a little expensive. I'm going to have to look into it and see just if I think it's still worth buying. But I think below $100 you can still be buying it. Google, I forgot to talk about them originally because they were on my second page of notes. So that actually makes 5 of the Mag 7 companies that released earnings this week. So I did misspeak earlier there. They did beat earnings. They missed revenue. They were actually up on the week. So Google, I think, probably also not incredibly overvalued. Based on PE, no. Based on free cash flow, yes. So they're definitely a little bit overvalued, but I don't think they're as overvalued as Apple is, as Microsoft is. Meta, I didn't actually look into, although I definitely think they're a little bit overvalued, and definitely not as overvalued as Nvidia is either. So the next one here is Chipotle. This is another one I have on a watch list. I just think it's too expensive where it is here. They did beat earnings. They missed revenue. Chubb, this is one of the Warren Buffett recent stocks. I actually have had it on a watch list since before he's been buying it. Obviously, since he's been buying it, the stock was way up. I think he started buying it around like $240, $250. It's up since then. They missed revenue. They beat earnings. EXR, Extra Space Storage, they did beat revenue. Earnings were in line. Visa released good earnings. They were up nicely on the week, although I think they trended down a little bit after that. I very much love Visa, MasterCard, even though I think that regulation is a little bit of a concern, competition is a little bit of a concern. Until that actually cements itself, I really do like them, although they both are, I think, a little expensive where they're at right now. Automatic data processing, oh, that's not the right ticker. This is one that doesn't come up here. Automatic data processing, they did beat earnings and revenue. I've had this company on a watch list for like a year. I've been waiting for a pullback to buy it. Hasn't really happened. Looks like I probably should have started buying some back in July, but I never did. So what can you do? Caterpillar missed earnings and revenue. They were actually down on the week. Caterpillar is one that I have been buying for quite a while now. I like this company over the long run. I don't think it's necessarily a steal of a deal buy, but I think it's just one of those bread and butter companies that if the economy is going to do well, a company like this is going to have to do well. And then the last one here is CDW. This is another one that they got hit pretty hard on their earnings. However, I started buying them again. I think that they're definitely a value where they're at right now. They could correct further for all we know, but I like this company, and I had a price target. I think it was the low 190s. It's below that right now, so I do think below 200 it's a buy. So that's basically that. So that is all of the companies I wanted to talk to. Like I said, I still think we're overdue for a pullback, but nobody knows when it's going to happen. And I mean, we're still above, I think, all of the major moving averages, other than maybe the 20-day. But so again, until we break below, let's say, the 50-day moving average, I don't see the market trending down anything significant. So that is my opinion. Like I said at the start of the video, if you got value, please like, subscribe, comment, all that good stuff, and stay tuned for more.